Is dividend investing a good idea? That's what we're going to talk about in today's video. Now, before we get started, let's talk about what a dividend is as it refers to investing. A dividend, when it comes to a mutual fund or an individual stock, is basically a payout that the company is paying you for investing into their stock. Think of it like this. Imagine as if you own Pepsi or Coca-Cola. Pepsi and Cola make money, and that money goes to you because you own a share of their stock. That money gets paid to you in a dividend. In fact, if you bought Coca-Cola in 1995, you would be getting dividends every single quarter here, as shown in this little graph here. You can see this number right here. These are the dividends per share that Coca-Cola has been paying out over the years. Now, one important thing I want to talk about before we go any further is that not all stock companies actually pay a dividend. However, most of them do. Some stocks are made more for growth, and they make their money by appreciating in value, while other stocks do dividends, and some stocks kind of do a little bit of both. In fact, I personally believe that doing a healthy balance of dividend-based stocks and high-growth stocks is probably the best way to invest your money. You can see with my ETFs and my portfolio, these portfolios have thousands of hundreds of different stocks that have some that pay dividends and some that don't. Dividends from stock-paying companies are basically paid usually every monthly, quarterly, or annually. Stocks and ETFs that have a lower frequency of dividend payments will generally have a higher dividend payment per distribution, while stocks that pay monthly will have a lower distribution total per payment period. It doesn't really matter which one you choose, it really just depends on personal preference. Basically, to summarize it, a dividend is basically a form of payment that you get for owning a stock that is generally paid out every quarterly by dividend-paying companies. Dividends from dividend-paying stocks are generally paid on a per-share basis. For example, if you own 50 shares of a company and they pay a dividend of 0.6 cents, you will get 6 cents times 50 since you own 50 shares of that company. If you're ever curious to how much a individual stock pays per dividend, you can do a simple search into Google to find for the stock, in this case Microsoft Corporation, and you can see the amount of dividend that they're paying as long as the dividend type, the yield of how much it is per year, and the declaration date, recording date, and payable date. So the declaration date basically says as long as you own the stock before this date, you will get this dividend, and then the pay date is the actual date that you'll actually get that dividend. And this information you might have to dig a little bit around for, but it's generally easy to find for each dividend paying stock. So if you owned 50 shares of Microsoft, you would get 51 cents per share if you owned that stock. You might be thinking, what is the best thing to do with your dividends that you get from a company? Well, you can do whatever you want. You can take that money, you can spend it, but a lot of people actually sign up for a DRIP, which is basically a program where they take the dividends you get from a stock and then reinvest it back into the stock. And this creates that magical thing that everybody talks about called compound interest. And this is what makes dividend investing a very attractive model of investing for a lot of people. Think about it this way, you're investing in a stock, you're getting those dividends are going back into that stock, and it just keeps compounding to make more and more money. Now, most robo-advisors will enable DRIP by default, but make sure you go to your settings and check it to make sure that they're reinvesting your dividends so that you can keep buying more stock and earning more dividends. This is the best way to do dividend investing. As you can see on my account here, it starts off small, but every time you get that dividend, it slowly gets invested back into your portfolio, and then that makes you more and more dividends, and then that money just compoundly grows over time. And you can see it really does increase as time goes on, as long as you're regularly investing your money. The other thing that people like is generally the fact that with dividend investing, you're getting money on a regular basis. You might get money from a monthly basis, you might get money quarterly, but instead of waiting maybe a couple months or 6 months or a year or even longer to get high growth stocks to raise up in volume and make more money, with the dividends, you're actually getting money right away. In fact, after 30 days of investing, you can start earning income from dividend paying stocks. And this is why a lot of people like them, especially as you get older and your income drops into retirement. Now, I personally own a good mix of dividend stocks and non-dividend stocks. My main portfolio has a bit of both. However, I do have a stock portfolio that I've been building out. It is 100% dividend focused. And this is my approach to I'm doing this for a couple different reasons, but I do like the idea of getting regular money coming in on a regular basis, especially if somebody who works from home and I don't work, and my income is kind of up and down a lot. Dividend paying stocks are very attractive because I can guarantee that no matter what, that money is coming in. And if in the odd event that the market crashes or something happens, dividend paying stocks guarantee that you're getting money on a regular basis. Even if your stocks go down a lot, maybe over the course of a year or something like that, at least you're still making income. At least that money is still coming in and you don't have to worry. And then while the stock market kind of rebalances itself, your dividends are just going to increase in value as you keep investing them. Now, this begs the question that is dividend investing more better than high growth investing or other types of investing in stocks? In my opinion on it really depends. I think most people will probably be best with doing a mix of the two, because you do want high growth stocks, because in the end it has been statistically proven in most cases that high growth stocks outperform dividend stocks. But it really depends on what you want. Do you want income coming in on a regular basis, or do you want to wait a couple years to make more money off your off your stocks? It really depends on what your final goals are. And last but not least, I have to finish this video. Even though I love dividend paying stocks, I have to say that dividend stocks do come with some risks. And although this is very unlikely and it doesn't happen that often, any company can basically eliminate their dividend whenever they feel like it. This isn't very common and it doesn't happen that often, but it can happen. So it's always something to keep an eye that, hey, you know what? If you invested in Pepsi, they probably are going to be paying a dividend forever, but there is that chance that at some point in time they could cancel their dividend. But this is very unlikely, but it is a possibility. So here's the thing I think you guys should do if you want to get started with dividend investing. I think you should go with a robo-advisor, put your money into a couple different ETFs and get started with that. Last year, I put my money into Wealthsimple, and Wealthsimple gave me an ETF portfolio that has a mixture of high growth and dividend stocks. If you look at here, this is my total, guys, my $38,000, almost $39,000 that I have. This number right here, 2,564, those are my total returns over the course of about a little bit over a year. Now, I made about $600 in dividends, but the bulk of that income actually came from the growth of those stocks. So at the same time, although I love dividend investing, if you want good, solid, and the best returns, I think you need to combine that with some good, solid, high growth stocks. And at the same time, you can get that money coming in on a regular basis, you can feel good about it, but you can also get, really maximize your return. And that's why I recommend that you guys do that. And if you guys want to see how dividend investing works by picking your own stocks, I highly recommend that you check out my dividend investing case study. This is a series where every single week I put money into a dividend-based portfolio that's 100% focused on dividend investing. I'll put a link in the description of this video if you guys want. So check out that playlist. We start completely from scratch here, and every single week we grow this dividend investing account. So if you're interested in working with dividends and getting started with it, I highly recommend you guys check that out. Enjoyed this video, please let me know in the comments section and let me know what you think. Hit that subscribe button if you guys enjoyed it, and I hope you guys enjoyed this video. I hope this taught you a lot about dividend investing. If you guys have any questions or anything like that, feel free to drop a comment and let me know. Thanks for watching, everybody. I hope you guys enjoyed the video, and I'll see you later.